Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
I hear you loud and clear, Coach Jay. Happy Wednesday to our At the Buzzers. Uh,
Happy Wednesday, everyone. Wild Wednesday. I think that is the moniker that we're giving Wednesdays now. It is a was a pretty wild day in the markets. Presented a ton of opportunity on both sides in a bunch of different markets, and we will definitely cover all of those. Welcome to At the Buzzer, our market recap. If this is your first time here, the goal of this segment is to review what happened in the markets for the day. We may talk about some markets that you have not traded before, but we believe our goal as traders is to identify opportunity. We want to see how we can take advantage of those opportunities while managing our risk. If this is our first time meeting, I'm Coach Jay. Been a Topstep performance coach since June of 2023, and that is Coach Paul. Coach Paul, go ahead and introduce yourself.
and I'm Coach Paul. I've been with Topstep since April of 2023. I've been involved in the futures trading industry for 4 decades. I'm here to share some experiences, some knowledge, and hopefully help you become a better trader.
Awesome stuff. You are all our chat, our audience. Thank you for joining us each and every day that you do. If you could do us a favor, hit that thumbs up button. We appreciate you all being here. Let us know how you did today. Are you up on the day, down on the day? Anything that you learned from the day? I see Scott Vaughn in the chat, guys. It was my first day ever in an XFA, and I made $75. Good job. Good start to that XFA. Remember, it's about consistency over time. So continue trading well in that account. Understand that losses are a necessary part of trading, and they're going to happen. But as long as we manage them, continue to trade in your account. Saw Daniel also saying, my first time taking a payout. Love hearing first time payouts. I've watched the check boxes through the process, but it checked finance processing 24 hours ago. If it's your first one, give it a little bit of time. But Daniel, congrats on paying yourself. Give it a little bit of time. That should go through pretty soon. Not sure exactly which payment type you took out, but hey, you're paying yourself. So great job there. Let's take a look at the markets. We may be ending the longest ever government shutdown here in in a couple hours. We may be getting a vote on what the government is deciding to do. It's passed the Senate. The president said that he was going to sign it. So just a couple more steps to go here. With that being said, one of the things I thought was interesting, we heard from the White House press briefing, Coach Paul, was that the CPI data for the past 2 months may not ever come out.
How are we going to live without that?
I don't know, man. I don't know.
I hope they never come back out. I enjoy it not having them myself.
Pretty clean price action we've gotten. Without some of that economic data. Of course, it's a good thing that the government shutdown is coming to an end for all of our government workers and air traffic controllers and things like that. But some of the economic data we have not had, and some of it we may not get. So interesting times here for sure. A ton of Fed speakers out today. There was a 10-year auction as well. Cisco just reported earnings. Shout out to Cisco. Earnings per share came in at $1. Estimates were $98. But then I'm also seeing another earnings per share number here. Revenue came in at $14.9 billion. Estimates were $14.7 billion. Pretty much in line with expectations there. Nothing too major there on Cisco. Anything else you got on the news, Coach Paul?
Nothing on headline news for today, but there is, speaking of numbers, a Japanese PPI coming out this evening out of Japan. Maybe that could stir something up. Other than that, government shutdown ending. There's nothing out of the ordinary. So, but I think there might be something tonight off of that PPI in Japan.
What's happened here? I just lost my layout. Oh man.
What?
I lost my did I lose my quote board? No. I'm back. Okay, there it is. That was scary. Chat, you don't know how long it took to rebuild that quote board after losing it the first time. So that little mini scare there, but we're good. All right, let's talk about the markets then. We got 36 different markets we could trade with Topstep accounts today to the downside. We had RBOB. Let me make sure I go ahead and save that. We had RBOB gasoline futures down 2.78%, heating oil down 3.77%, and crude oil, our biggest percentage mover to the downside. All the energies today leading to the downside. Crude down 4.33%. I think Crude heard us talking about natural gas and said, you know what? I got something for you. Got
I
something for
can
you too.
also trade.
Yeah, right, right. Don't sleep on Crude. It's been a tough trade, but every once in a while it does present some pretty good opportunities, and today was one of those opportunities. To the upside was energies to the downside, metals to the upside, gold up 2%, platinum up 2.23%, and silver, our biggest percentage mover to the upside. Shout out to all the silver traders. I know some of you watch day in and day out and have been asking us to take a look at that silver chart. And we said it yesterday. It looked like it had the potential uh, to lead the metals higher. And silver did not make a new all-time high, but we are pretty close to it. Less than a percent off that all-time high. In silver, at the highs, we were about less than a half a percent off that high. So really nice move in silver there. To talk about our big four, we already mentioned crude oil down 4.33%. The S&P pretty much flat, down 0.08%. Gold, we talked about up 2%. And the NASDAQ flat on the day, down 0.01%.
Like, literally flat on a day.
Flat. Took the long way. It took the long way. Made a couple trips, but right back to where it started. I think settlement was what was it, 25,640 in the Nasdaq. So we're closing right below that. But yeah, interesting day there. Presented opportunity on both sides. The white line algo played out again today. We'll talk about that in just a little bit. Brandon says what we're seeing in silver looks like exactly what the ES is about to do on the daily. Yeah, we had that 200 moving average. Sorry, the 20 moving average. We were trading between it for a little while, between the 20 and the 50. We closed above and then broke out. Gold did the same. We'll get to that chart in just a second. But let's take a look at the equity charts, starting with the Nasdaq. What are you seeing here on the daily, Coach Paul?
Unchanged. So,
Yep.
hugging the 20, I do have a flair for the obvious. I've developed that in my old age.
Right.
But holding that 20, still, who was it said kind of looks like silver? Um, yeah, just an inside day of a small inside day,
Yep.
hardly a correction. So it still looks healthy to me.
It's almost like the market is waiting to hear whether or not we are still shut down or not. Still a decent range to trade. High to low, it's 300 points in the Nasdaq. The daily ATR is 438, but a 300 point range day, quote unquote, was a trend day last year or the year before. So pretty nice opportunities still in the equity markets, just not really going anywhere directionally right now. Let's take a look at the 30-minute chart, and 3 days in a row white line algo is playing out. That white line that I'm talking about, the 200 moving average on the 30-minute chart here, uh, has been support 3 days in a row now. It's almost the exact same trade. But let's take a look at what happened last night. Here is last night's open, Coach Paul.
Well,
And,
we had urgency. That was a nice trade to the upside, um, where we hit the first level of resistance. Um, and overnight, but it was a great trade. I mean, a continuation from a bounce off of the 200 yesterday. But once again, that night trade is filled with light volume. And other than that, coming into today, let's look at the volume profile.
let's take a look at the overnight volume profile. And really, what like again, this is almost a mirror image of what happened yesterday. We didn't have as much of a rally in the overnight session, but came down, tested that 200 moving average. And one of the things we've been talking about a lot is where is volume in relation to that 200 moving average when we get there. And we saw price, saw this yesterday, price trade into that 200 moving average, volume didn't. Nice reversal, and almost the exact same thing today. Let's take a look at that overnight volume profile. This over right here. And very similar story here. We got that point of control, overnight point of control up at the highs. And then we'll go down to a shorter time frame chart here. Taking a look at the 3-minute and the New York session open. Uh,
What can I
hold
say?
on. We'll make that developing point of control red. And we've talked about this, right? So what happens when the New York session opens and we know that the most volume is going to come in for the day? how does that volume respond to the overnight inventory? It rejected at that point of control, which was up at 780, never actually even traded above it. It traded to it, and volume never traded higher. This is what we call urgency. Right? As soon as the New York session opens up, and we talked about this during the opening call, are we going to find buyers above 25,800 or not? Right? We saw that price traded above 25,800 during the overnight session, but volume stopped around 750. Right? When I say volume stopped, VWAP stopped around 750. We established that point of control up at these highs, a lot of absorption of buyers, if you will, or maybe attracting some new shorts into the market. And then as soon as the volume comes in, uh, aggressive sell side move here, pretty much right into that 200 moving average. Now, there were some bounces in this. Some of these counter trend moves are 100 points. So if you if you felt that it was tough to hold all the way to that 200 moving average, I don't think you were wrong, right? 100-point move in the opposite direction. Uh, Depends on the size of your trade, but VWAP still validated this trade the entire way down until we started to get significant price action above it. Anything you're seeing on this short time frame chart, Coach Paul? Looking at the 3 minute here.
It's looking at the, we can look at the half hour in a minute, but you're right. It was not easy. After the open, after the open, we had urgency. Felt like it was going to collapse down to. But what happens? Volumes drifted off.
Yep.
So we had a discussion earlier. What would cause it to go yesterday? I think what would cause it to go lower? Well,
Volume.
higher volume, which to me would represent new sellers, and we did not get it. So other than that, we look at the 30-minute and we can see what the white line is.
Back to that white line algo here. If we look at the candle that tested that 200 moving average, we did trade below it. We did trade below it, right? This is the Nasdaq at the end of the day. So initially getting short and having a now, I'm not saying that it's easy to hold for 275 points in the Nasdaq, but having a 275 point target for where you think the market has the potential to go is not unreasonable in these conditions, right? Now it's how do I hold on to that trade if I do at all? Right? Trade management in all of this is important, but uh, you know, it's the Nasdaq. We're going to run the level by 20 points before we bounce. But really, no selling under that 400, that 25, 500, that 200 moving average there. It's the third time they did it. Again, really strong bounce off that level. The Nasdaq looking a little bit weaker than the S&P did today, and we'll take a look at the S&P really quick. Lotta in the chat says the Coach Paul urgency trade is an infinite money glitch. Passed 3 combines and got a payout based off that setup. Thanks, coaches. Hey, anything we share here, it's a perfect time. Coach Hoop sent that disclaimer in the chat. But anything we say here is for educational purposes only, not a suggestion to take a trade. There is considerable risk in futures trading. But if you can take information that you learned on a YouTube stream for free and get past 3 combines and take a payout, says a lot about you as a trader. So lots of shout out to you.
Great job. Congratulations.
Yeah. Up 500, lost it all this morning, and only finished up $80. Only $80? Hey, you saw some setups that maybe you thought were legit setups, still made $80 on the day. Now, who said that? YouTube said it. When you were up the $500 and then you continued to trade, were you trading to make more money or were you trading to make good trades? If you're trading to make more money, that's probably why you gave some back. If you're trading to make good trades, you may have still given some back, but you could at least live with that decision when you do that. Right. Let's take a look. Anything else on the Nasdaq, Coach Paul?
No, it just looks kind of friendly to me.
Yes, it does. Still holding
Other
that
than that.
200. All right, let's do something here. We're going to introduce some more charts here because we've seen and you might have heard Jack talk about the rotation trade. We talked about this yesterday as well. I'm going to keep the Nasdaq on the left, and we're going to put the Dow on the right. We're going to go to 3-minute charts on both of these. And look at the opens.
A tale of two different equities.
Two completely different markets today. Now, sometimes we say the equity markets move together, and sometimes we do see that, right? Usually, when they're moving together, there's some type of fundamental news that just says, "Hey, you know what? Sell everything." But in this case, this is like a mirror image chart. Here's the opening range in the Dow. Here's the opening range in the Nasdaq. Dow made new all-time highs today, 45, 48,528. The Nasdaq did not make new all-time highs today. Is this rotation on a shorter time frame? What would you call it, Coach Paul?
Well, this is a perfect time. Someone was asking, what is the definition of an urgency trade? This would probably be, can you explain the urgency trade? So we have two different people. This is classic examples.
Yeah, we got two of them right here. Go ahead, Coach Paul. Explain that if you can.
So let's start with the Dow. We have the first opening 3 minutes. And Coach Jay has already framed that out. Immediately, we break out of that range. So we're seeing buying out above the opening range, and VWAP also goes out of the opening range. That was an urgent trade. There was urgent buying.
Mhm.
They weren't, in other words, they were on the opening. They weren't working orders, like let it come to this level. It's like whatever large institution or trader they wanted the Dow. That's what an urgency trade is on the buy side. Now, and this is a classic. I mean, now we look at the Nasdaq. We have an opening range. We close out of it with in the third candle after
Third candle.
VWAP follows was urgent selling. So you had price, and that was a big range.
Yeah, this is a 102 point range in the Nasdaq, and a lot of times when we see big opening ranges like that, we get a chop and consolidation inside that range. But the what really helps define that urgency is the angle of this view up. You see how steep this is, right? If I was going skiing or snowboarding, I'm going to start right at the top, and I'm not going to stop until this flattens out. Right? We're going to take a look at gold and the gold opening range trade, which turned out to be a good trade as well, but it took a little bit more time for this trade to develop. In this case, and I suggest everybody watch Trading Places. This is that scene in the movie where they waited, they waited, and then they place an order and the entire floor flips their direction, right? Everyone was buying. And then there's an order that comes out there and they say, okay, sell everything. This is that sell everything type of move where it doesn't matter what price you get, sell it because we have to get out, right? And that's what we're defining as urgency. Um, Sometimes when we see urgency early, it's the trend for the rest of the day. I'm trying to think if there's any markets that gave us that in the overnight session, but there it is.
So, very rare case in equities do you see one go the other. So, one go one way and the other go the other way. In this case, the Dow go up and Nasdaq. I'm going to go out on a limb, and that's definitely rotation. It's flight to safety. You're coming towards the end of the year. Wow, we only have 6 weeks left in 2025.
Yep.
All right. And you can, in rotation with the biggest movers this year was Nasdaq, specifically Nvidia.
Hmm.
And you want to profit take, you get out of Nvidia or Nasdaq and sit in blue chips. The Dow.
Right.
No one gets fired. No money manager ever got fired for owning blue chip stocks. And if you have to own stocks, you go risk on. Risk on would be owning Nasdaq stocks, Nvidia and Tesla and the lot, or risk off blue chip stocks. So definitely a rotation. I think the end of the year had something to do with that, personally, just through experience. Um, so we don't spread, we don't talk about spreads, but boy, that was a spreader's dream
Buy the Dow, sell the Nasdaq, make money on both
on
legs.
both.
Yep. Yeah. What a trade. What a trade there. We got a question from Peter. Do you think Asia will take the prior day low and Monday low on the Nasdaq? Suspicious we turned around 2 pips before today. Gonna say it depends. It sounds like that is maybe a trade strategy that you look at, Peter. So if it is the case, look for that to happen. I Coach Paul and I spent some time trading together today in Discord, and one of the things I want to try to do is, especially before the market opens, predicting what may happen. Because if I say, let's say I say, the Nasdaq, and this there's nothing, there may not be anything wrong with this, right? And I want to be very careful when I say this. If your trade plan says I cannot get long until the market sweeps this prior day low, there's nothing wrong with that, right? But if I go into and you say I'm going to buy it after that happens, I don't think there's anything wrong with that. Or I'm going to sell it after that happens. I don't think there's anything wrong with that. But if I go in right now and say, okay, the Asia session is going to sweep this, that's trying to set defined, definitive parameters around uncertainty, which if this just rockets to the upside and makes new all-time highs, but in my mind, I say, no, it has to sweep this prior day low. Am I shorting the entire time this is going up? Right? So can it sweep this low? Absolutely. Does it have to? Just like a gap doesn't have to fill. I know one thing. If it does sweep this low, the volume in the trade is going to show me that it has the potential to sweep. And then we go from there. It's my safety check if prior day low is not swept. Thank you. So, and there you go, Peter, right? That's a part of your process. So if that's a part of your process, keep it there. Anything you want to add to that, Coach Paul?
Follow your process, plan your trade. If that is it, one of the, at least for me, one of the things is in my process, sometimes I'll jump in early.
Yep.
And I've been correcting that lately. Let it happen. It's such a much easier life. It doesn't mean I'm going to be wrong because jumping in early is predicting. And you're predicting what the price action. And that's what you don't want to be doing. You want to execute your plan. Let it happen. So for that, yeah, anything can happen, but if you've had success looking for that setup, don't preempt it. That's where when we talk about patience. If it doesn't happen, it doesn't happen. That's really so you limit your risk by not taking marginal trades or jumping in early. All right.
But I know there are a ton of traders that look for prior day low, prior day high sweeps for their trade opportunities, and keep doing it if it works for you. All right. Anything else on the equities, Coach Paul? We want to move on to.
Let's move on to the metals.
Move to the metals. Gold, gold, gold. What are we seeing here on the daily?
Oh, we're still haven't got over that 50% of that big candle, but man, did we curl fast and rally hard in this week. See, what was today's low?
Right near that 20-day moving average. 4104.40 was the low. 40.93 half was that 20-day moving average.
Yeah, it looks very friendly to me.
Yep.
Personally, this is not trading advice, but me, I think this could, in a hurry, go to all-time highs. This is the velocity of this week's move.
Yeah. Uh, we are less than 5% off the all-time high here in the Nasdaq. We open up the day about 5% down. What I'm looking at that we're testing, and we talked about this a little bit, this 4240 area, right? How do we respond here if and when we trade there? The reason I'm marking this one out is because if we look back at the 3-month consolidation that we had, the turnaround candle, we rejected at 50% of that candle 6 times before we eventually broke through it. This is going to be the first test since we printed this candle. Of our buyers here. So do they have the strength to push us higher? We're also testing the low of what was the highest volume candle of the year in gold. So we accepted price it back inside of it. We closed inside 4240s, but has the potential to take off here. Someone asked, what box am I using here? It's just a fib tool. I'll pull up the settings here so you can take a look. Fib retracement 0, 0.5, and 1. It's just a way to mark out the high, low, and 50% of high volume candles. Will Rodden says this stream should have 500 likes by now. I could not agree more with a comment that I've seen all day, really. So if you can do us a favor, hit that thumbs up button. Want to set a like goal for pivots again? Set it at 300. Let's see what we can do here. We're at 46 right now. I'll be 47. All right. Anything else you got? Oh, actually, here, let's go down to the 30-minute chart here on gold. What are we seeing on the 30 here, Coach Paul?
Well, let's look at the action from last night. We did get a dip, and that dip went to the 20-day moving average, and we're still above the 200 in the half hour. Now, somewhat in defining urgency, this trade was not an urgency trade. It took 7 or 8 half hours to break it.
Yep.
Or even longer. So there was an urgency in the selling, and there was selling. So just to make sure you know the difference. But with that 20-day moving average in a daily in gold, and which was, let me see. Let's
had
mark
it at 4093.
4093. So it's good to be aware of these levels when you're looking in a shorter time frame, looking at the daily levels. Now we go back to the half an hour. We didn't touch it, right? But what happened down there when we got near it?
The flow stopped. They turned the faucet off to the downside.
They turn it, and they turn it on to the upside.
Yep.
Now, what kind of candle is that? Is that a doji?
Yeah, I think we could call that a doji. I didn't read my candlestick pattern book, but yeah, I think that's a doji.
On extremes, right? But right there, if what I like to do on this, because I'm only looking to buy gold. I didn't have any urgency on the buy side. Now we have a break. Now let's see how the volume profile gate might have given us some information. And when we get to that low, we were up. Good. It was stayed up. And look what happens when it came down. That was it. So sometimes we can't, we get some new information there. The volume, the point of control.
You're talking about this point of control
down.
flip here.
Yeah.
Okay.
Yeah. And held it. Then it took some time, but we held that level Um, then what for what it was the US that it took off under oh, what's that? Is that a big was that it that was
Uh,
yesterday's
we
big
yeah,
break?
we
Yeah.
we talked about this as we were talking about gold yesterday. Just watching this high volume candle. That's obviously the candle that set the low for the day yesterday. But back to Peter's point, who was saying, do we have to sweep prior day lows? Hogue says it all the time. What doesn't happen is almost as important as what does happen. And in this case, not being able to, we know that this is an area of exhaustion here. This is technically on a higher time frame, a J trade that never got invalidated. We had a low volume here. We closed above that high and we never traded below that low again, um, because there's absorption of selling here. Now, this is a huge trade. And do I suggest sitting through this even with a micro on? It's 30 points of drawdown. It's kind of tough. But when we see that volume signature and we see, failure of sellers to take this lower with that point of control flip, VWAP stops moving lower, that's rejection of lower pricing. Now, what does that mean for your trade? Uh, in this case, I meant, find a place to buy it. Anything else you got on this higher time frame, Coach Paul? I want to take a look at the opening range trade.
All
In
right.
gold.
Nothing else on there.
Let's take a look here. So opening range, gold opens up at 8:20 a.m. Central Time. Sorry, 8:20 a.m. Eastern Time, 7:20 Central. And here's an example of an opening range trade that maybe wasn't so urgent. And we talked about this one during the opening call, where normally, and in this case, it would have worked, right? Where what we've been looking for is a candle close outside the range, candle close outside the range, trading in that direction, right? So in this case, we should have been long, stop below the low. But for me, I've been stopped out of so many opening range trades that I'm going to wait for volume to leave the range. In this case, this is not an urgent opening range breakout trade. It took an hour and 15 minutes for volume to leave this range. The reason personally I like to wait, and this is completely a J discretion thing. The reason I like to wait for volume to leave the range is because once it leaves, if it's going to be aggressive, the market will be going in my direction. Now, I might have had to pay for a little bit of a confirmation here, but I don't have to sit through a trade for an hour that's not doing anything, right? Playing the mental gymnastics of, oh my God, is it going to go? Is it going to stop me out? Maybe I got long above this high. Now I'm in drawdown. Now I'm not. I'm in drawdown again. Now I'm not. But if we wait for volume to leave that range, you might get a worse price, but you have a little added confirmation that the market is with volume trying to go in the direction that you're looking. Now, again, that's my execution style. Some other people are just going to say, hey, you know what? It broke the range, take the trade. And there's nothing wrong with either. Um, but once we got that volume confirmation leaving that range, uh, what a trade.
Yeah. Here's another thing is not trying to this sounds ludicrous,
Mhm.
but not trying to buy the low
Right.
can help. If you're trying to buy it because what's the low? We really can't confirm that until after.
Right.
But using time and volume, you get an idea of like here. It's even if it didn't leave the range, VWAP didn't. But what was the price doing? It was going
Uh,
sideways.
Price is going sideways. Yeah. Trying to leave.
And that came in, and it wasn't even. That's funny. That's the U.S. Open.
That is correct. Yeah.
Hmm,
This is the pit open here, 8:20, but we really see where it started going.
nice.
That's where it started going. Mariah in the chat asks, "Where's the volume confirmation? I see it when VWAP starts to accelerate upwards." Yeah, that's exactly it, right? So once, and we don't get to see the charts like this, right? We get to see them like this. But if I'm looking to buy gold, which we were looking to buy gold, right, on a higher time frame, right, and context matters, right? What are we doing on a higher time frame? We're above the 200 moving average. This is a market that has been in an uptrend. It's kind of been hard to sell gold, so I'm already going with the idea that I may want to buy, but how do we avoid blind buying something? We wait for the market to confirm what it's doing, and then we get a piece of it, right? If we go with the idea that the tops and bottoms of the move aren't meant for us, then we can catch the piece in the middle, and know use the example of a one winged airplane yesterday, but this is
Please use
takeoff.
that again. I've been I've been
You would
pondering that myself.
you wouldn't buy a ticket to sit on an airplane that only has one wing because you never know when you're going to be able to take off. But once I have if I can confirm that it has 2 wings, right, and a pilot capable of flying it, right, then yeah, you know what? Hey, I'm going to, I want to take that flight because the market is confirming that it has the potential to do what it's doing. So volume leaving that range is confirmation that yes, we've checked off trading price lower here for now. Now, there's not always a guarantee. We could see the market turn around, but what happened in this case is that VWAP the market kept pulling this VWAP higher. I saw somebody ask, is VWAP lagging? Uh, it depends. I think it tells you different things. Are there some moving averages and things like that that might stay closer to the market, right? I know a lot of traders use a 9 session moving average, right? Does that tell you the same thing? Does that tell you something different? Maybe. That 9 is starting to hold here. So you could use something like that. But for me personally, I like using VWAP because it's that volume confirmation. 9 EMA looks pretty good there.
And we're talking about, is it lagging? I would, proffer no, because
Mm,
it's updating all the
right.
time. If there's no volume, price is not going to move.
Mhm.
If there's volume and it's buying volume, and that's part of the equation of volume weighted average price, it's pretty spot on. The equation can't change unless there's a change in volume. That's why as soon as I saw it and understood it, I'm like, wow, this is better than a moving average. It's because it's being updated all the time by the volume. Great question.
2, 3. So someone asked, what if you use a 15-minute opening range? Let's take a look.
Sure.
Let's take a look here. 15-minute. I mean, honestly, the 5-minute opening range became the 15-minute opening range pretty much because gold took a while to leave. But let's see, right? 15-minute opening range is going to be a little bit weird for gold because it opens at 20, right? It opens at 8:20. But here's that 15-minute opening range. Once we get a candle close outside the range, it still took volume a while to leave this range. But whatever you do, just keep it consistent. Right, here's that 15-minute opening range. Price never closed below the low. Still a pretty good trade. Uh, and crawdad averages lag by nature.
Yep.
Go for the math lesson. Anything else you got? Actually, somebody asked, can we compare gold and silver? Let's do that.
So an appropriate time. It's almost Christmas.
Ah, take a look at the silver chart here. What I meant to do. All right, gold next to silver, and I think the question was, uh, which one looks easier to trade?
The
Let's
one
see,
that
both
makes me money
the
quicker.
what right. Let's see. Here's last night's open in silver. Last night's open in gold. Gold maybe a little bit whippier, where we got a little bit of a pullback. This is not a small move in gold in silver either. Silver probably looks a little easier here, but it's I hesitate to ever use the word easy when it comes to trading, but uh, these are kind of identical charts.
I will tell you this: gold is much more liquid.
Much more liquid. There you go.
So, in those terms, it's gold to me.
Yep. There you go. But pretty identical charts there. Pretty close. Silver got a little less of a pullback today. Was the bigger percentage mover to the upside? Here's a good question from Rich. Which one can you afford to trade? Uh, trade micros in both. That would be the suggestion. But yeah, really nice moves in both of these markets. Silver is the Dow of metals, easier to trade and nobody talks about it. If you're trading it, just talk to everyone about the profits that you make, or don't talk to them. Just live your life and trade the market that's moving. Um, you use the RTH chart, regular trading hour chart, to measure the opening range. So in this case, it really depends on the market. Um, so we're looking at a couple different opening ranges, to be honest here. This first box that we mark out every day is the first half an hour of the Globex session open, right? So when the markets open up again at 6 p.m. Eastern time, this is that first half an hour. One of the other candles we've been looking at is the Shanghai session for metals, which is this one here. That's 8 p.m. And then let's change this to a equity market. For the NASDAQ, will I look at the first half an hour? Absolutely, right? And here in the NASDAQ, we got some urgency last night, right? We talked about this one already. First 30 minutes, in 2 candles, price was leaving the range. In 3 candles, volume was leaving the range. So you can still use this. It's just in the overnight session for me personally, and I think Coach Paul as well, I'm not going to use like a 3-minute opening range in the overnight session. You can, and in this case, it would have gave you a nice trade to the downside. But because there is less volume during the overnight session, I think giving the market more time to establish some data is important.
Yeah, that early, if just the 3-minute, there's not much information in it at
Right.
night, and not only that, but there's not much volume relative to the day, so give it some more time and more volume, and that's what we've experienced.
Yep. Johnny G has a question here. How can I tell if sellers or buyers are being absorbed? Take that one, Coach Paul. You want me to take it?
I'll hand that to you. You're the volume man.
All right, let's see what we can do here. All right, so there's a couple different ways to do it. I'm trying to think of a market where sellers got absorbed. Okay, let's take a look at the Nasdaq today. Who was in control from? We'll take a look here. Regular trading hours. Who was in control from this point, from the open in the Nasdaq? Who was in control? Right. Obviously, the answer is sellers. The sellers in control from the open. Uh, what absorption kind of looks like is, and I'm trying to do this without having to use any other tools. So let's just use VWAP, right? If sellers are continuing to sell this market, right? They have control initially. If they're continuing to sell and get favorable price action, this VWAP should continue lower. It should continue lower, right? Now, in this case, you have to context is important, right? So we know that we had this prior day low here. We had the 200 moving average here as well. So I want to look for an area where buyers have the potential to step in. But look at what VWAP does as we get down towards these lows, right? So any selling attempts here are being bought back up, right? VWAP starts to flatten out a little bit. You can use delta tools. You can use, anything that tells you cumulative delta, right? Price is trading lower. Delta is not going lower, right? What delta is the aggressive market order. So if delta is negative, market order selling. If delta is positive, market order buying. That's the simplest way to look at it. If delta is negative and price is moving higher, sellers are being absorbed, right? But if you don't have a delta indicator, look at where VWAP is, where price is. If we start to get some of these extensions, you see all of these pops back up to VWAP. Any selling attempts at these lows, and they're happening at a major level, right? 25,500. These lows, these are being absorbed. Right. Can you use higher day, lower day VWAPs for confirmation? Absolutely. Absolutely. Definitely suggest, if you're interested in using anchored VWAP, read that Brian Shannon book on anchored VWAP. Great book. Does DMI help with this? Yeah, there's a ton of indicators to help. There's a ton of indicators to help. I try to not get too indicator heavy, but yeah, there's a ton that helps. Coach Robert, if you have questions about DMI, does a session in
Yeah.
Discord every Tuesday and Thursday. He uses it all the time, and that's a good way. Directional movement index, and it is taking. No, Coach Robert says he doesn't look at volume. DMI is taking volume into consideration, but also the movement of the candles. So it is a good indicator to use as well. Is there a reason price doesn't hit the low? Somebody stepped in and bought it, or couldn't sell it anymore. We found the last
Or
seller.
the last seller finished
Right.
selling.
Uh,
Or to hit the 200 moving average on the half hour.
that was the real reason. That was the at the buzzer reason.
That
Uh,
was
all right. Who said this? If you have time, I think it would add value to pull up an RTH chart on the Nasdaq. Use the fib tool to measure the closing price to the opening price. Your volume method is really nice to see. Closing price to the opening price. Are you saying like oh yeah, the gap, right? The RTH gap. Is that what you're looking at? I think so. Oh, closing price to opening price. Opening price would be up here. Right. Let's take a look at crude oil.
oh, speaking of urgency,
Uh, what are we seeing here on the daily, Coach Paul?
oh, we got under the 20-day moving average, which we were trading in that range between the 50 and the 20 until today. Um, why? I'm going to give you the basic truth. There was more sellers than buyers. And it was continuous from the opening. It looks like we have a chance to continue to those old lows at 56 even area. But there was some urgency today. Someone wanted to sell it, an entity. And why do I say that? We look at the half hour. And last night, so here is urgency. VWAP leaves the range in the first after 3.5 hours. Price left and VWAP left at the same time. So let's look at the mechanics of it.
Acknowledged.
They're selling, right? And VWAP's moving lower. So I would say there's an algo selling. It's sitting. I mean, how many times did it touch VWAP?
Do we really want to count this here? Let's see. Let's see. Once we broke out of the range, this is 1, 2 candles, 3, 4, and then it didn't even get up there.
Collapse.
Yeah, just every time it got back up there, it sold it.
So
That was Crude's low key the trade of the day.
low key. So and when part of that is there's flow in every market somewhere. This is pure flow. This is
Mhm.
why we liked it because there was no heat.
Yeah.
Now with that said, I'm 2-1. I'm out. Now I could say, oh shit, I should have held it.
It's not what you
You
measured
know,
for.
that's not what you measured for, and that's not what you got in the trade for. Now, if you were in the trade going, okay, I'm going to hold on to it and I'm going to risk $200. So wherever it goes, then that's something that's part of your plan. Yeah, have at it. But that has to be decided before you enter. How many days do we get a $3 break?
Uh, let's see.
One.
Yeah. I mean, the obvious one here, right? But outside of that, it doesn't happen. I mean, this was $11. What a day. Where were
Yeah.
you when crude sold off $11? It's like, where were you when
Why didn't you say that yesterday, Coach, when we asked?
right. Man, what a trade there. That's a beautiful trade. Right off that 50-day moving average, right? And it starts, so this is an example of if you were to catch this whole move, maybe you knew something fundamentally or you saw something in the trade. This is an example of where being good, you can get lucky and get an extended move, right? If you hold on to that trade. right? I don't know. I know we got one crude trader in the chat for sure. JD, if you're here, let me know. Did you, even if you sold crude, did you have expectations for a $3 move today? Because Coach Paul, I think what gets dangerous, and we try to remember what is the market saying. If you caught a $2.50 move in crude oil today because you shorted at the highs and you held it throughout the day, this is where, to me, I would remind myself, be careful of making the exception the expectation. Uh, where if I go looking for $2.50 moves every day now in crude oil because it paid me really well one day, I might struggle.
Oh, you will,
Yeah,
because it's an outlier day. That's it. But the flow, and in that, the flow gave it to you.
yeah,
Why? Because it literally never closed above VWAP.
right,
Now, that would have to be your trading plan to catch that.
right.
Actually, with that said, could be a buy.
I was thinking the same thing. I was thinking the same exact thing. What I'm looking at here is this candle right here, this daily candle. 57.75 is
Mhm.
the low. Looking at that, see what happens there.
Alright.
Of course, I'm not just gonna blind buy it. Got to give me a reason to buy, but interesting spot there for sure. Anything else we want to talk about? Natural
Well,
gas
we didn't talk about,
sleeper today.
nat gas, and now we're going to, and we've ruined that market.
Just- they heard us talking on at the buzzer, and they're like, "Wait, these guys keep buying it near this 200 moving average. We can't keep giving them that trade." Uh,
Yeah, very balanced day. Um,
yep.
let's take a look at, a volume profile and see how that point of control was probably
We'll go with a VWAP flat line, and this point of control is going to be that VWAP guaranteed.
let's see. Oh, interweaving. Now, that was, you know, later in the day, we did get a chance, but look at that. So we're at finding balance. All right.
Hmm.
Today, I didn't trade it. I didn't find a solid trade. I was looking at it. And
Yeah.
then I ended up trading S&P and NASDAQ. And I didn't enter into that trade.
Mm.
So looking in tomorrow,
Tomorrow could get
it's
interesting because
another day.
I think we have inventory numbers tomorrow.
Yeah.
I think we might have some inventory numbers that could get interesting in natural gas for sure.
But boy, I mean, that's actually kind of, to me, friendly. We're on this. Yeah, we're at the 200 in the continuation um chart, which is on there, that we're under the 200. But on just the December natural gas contract, because it has a lot of data, it trades 3 years. It's been trading for 3 years. We're above the 200 moving average on the daily.
Okay.
I'm kind of friendly to this market.
Looking pretty good.
Not
Let's see.
kinda. We've held the 200-day moving average now for 2 days, and then we find balance, in the yeah. So, still, I like the opportunity on the buy side.
Yep.
Anything else you see in there, coach?
No, balanced day. You kind of expect that every once in a while, but there's still opportunity in this market for sure. What does inventory number mean? So just like crude oil, we get inventories every week. Just a status on the stock of natural gas or crude oil. I think we should be getting that number tomorrow. It might be depending on if whether or not the government opens up, but if we do, that should be tomorrow, I believe. And again, just it's like what does CPI mean for the equity markets volatility? Is there a guarantee? Can I say, hey, this inventory number says this, so the market should do this? I could say that, but I've been wrong doing that a lot. So I'd rather just watch what the market's response is and then just get in from there. Um, wow. American Trader in the chat says, "Hello, coaches. Haven't been on in a while, but just wanted to say thanks for the knowledge. My winning percentage is 24% this month, and I've been profitable. Another payout locked in."
Ha!
You
Welcome.
are,
First of all, welcome back.
yeah, welcome back. You are not a trader. You are a risk manager. Uh, and risk managers get paid. Is losing 24%, or sorry, winning 24%, losing 76% of the time. It's not easy to do. Not easy to do, but figured it out. So, and you're
I
paying yourself.
think
So,
that's awesome because
yep,
you can you're cutting your losses and letting your winners ride. I don't even have to see it. I mean, that has to happen in that. So, great job. Wow, that makes me happy. Good job. Keep
seriously.
up the good work.
We got a question here from Parsuva. Why are traders less attracted to the Dow? Because all of the none of the influencer traders trade the Dow.
Is that an
That's why.
opportunity?
That is why. Yeah. Right? Go rent a Ferrari and talk about the Dow. I mean, or buy one. Shit, if you trade it well. Why are no one talks about it? No one talks about it. It's sometimes it's the components may be in question, right? What are these random 30 companies that make up the Dow? Uh, but
I'm going to step in right there. Those
yeah, go
random
ahead.
30 companies are the highest capitalized companies in the country.
Yeah,
They're the industrials. It's boring. It doesn't have the whipsaw as the NASDAQ. It's like the NASDAQ is the sports car, and the Dow is your dad's Impala.
right. Get you where
As
you need to
far as
go.
sexiness is, but no matter what it is, if it works for you, trade it.
Mhm.
And some old traders would say, "And please don't come here."
I was just gonna say that. Don't invite people to the party. You don't want them to be there. Remember who's trading the Nasdaq? It's all the wild kids, right? If you're just trying to have a nice dinner party, um, you got people coming in doing keg stands and screaming, "Let's do a shot" every 5 minutes. You might not want them in your house. So you trade the Dow and you see price action in the Dow that is favorable to your trading strategy, trade it. Maybe trade it, see some success in it, come on Topstep TV and be the trader that trades the Dow on Topstep TV. I'll say it, we'll welcome that. Uh, we've been trying to make a conscious effort of talking about it a little bit more. Of course, we do have to kind of go with the markets that most of our traders trade. But you heard, Andre all day today. I mentioned it during the opening call as well. Hey, the Dow has the potential to make a new all-time high today. We just provide the information, but you know, literally look at any trade influencer right now and tell me what market that they're trading. It's gold or Nasdaq.
And gold is recent.
And gold is recently as of a
Heard it
month or
here
so.
first.
Right. And shout out to those traders who moved over there because we say it all the time, right? And there's nothing wrong with trading the gold or the Nasdaq, right? Our job as traders to identify opportunity. And I've seen some traders switch over to gold recently because it's presenting really great trade opportunities. But so is the Dow, right? So if you've identified that opportunity, stay with it. There are traders that we have here that are trading cattle because Coach Hoop keeps yelling out, "Hey, cattle's doing this, cattle's doing that." It's presenting opportunity. Are we going to hear, CNBC talking about cattle? Probably not. They might mention it in the headline, but not going to be, front of mind for traders. Everyone wants to know what the Nasdaq is doing. Everyone wants to know what, AI, the AI bubble is doing. That doesn't mean that there's a lack of money to be made or lost because there is risk in trading in some of these other markets. Um, Dan Emmons says, "I don't know how anyone trades cattle with the bid-ask spread of that product." Yeah, it can be pretty thin.
Well, it's a function of the price. It's sky high prices. They're
Mm,
not going to be tight. And actually, when we look at the Nasdaq shouldn't be a quarter cent.
right.
like, if I was the chairman of the Merc, I'd get rid of it.
Mhm.
But what it's just it creates a for to me, it creates a lot of light, and but cattle, when it started trading, was like 40, it's at 300 or
225, yeah.
226.
Yeah. Yep.
Um, so the bid and offer are well, there's not going to be many market makers of surviving if they're keeping tight bid and offers in a market that's gone up times 10. So, good question, but that's why. I mean, it's a much larger priced market. It's the bid and offer is going to be wider.
What I
And even
will
for
say,
size, if the Nasdaq, the size is there's a lot of small stuff in the middle, but it adds up, but it's not like those market makers are playing every tick. They're not.
yeah, what I will say about thin markets, especially one like cattle, where we know a great filibuster is here. There's not a lot of games that get played in the cattle market. Uh, thinner markets are thinner markets with a spread. I'll say that, and I'm excluding the Nasdaq from this. Are easier to read the flow, right? Because the aggressor has to cross a spread to get into the market, so it's a little easier to read what they're doing when that has to happen. Um, So it does make it a little easier. Dan, I saw your point, right? If you get in a position, you're instantly at a loss, especially if you're market ordering, yeah, two tick, three tick spread. But that just might be the nature of the market. What I will say about cattle though is that when it chooses a direction, unlike the Nasdaq, a lot of times it stays in that direction, right? Might pay up a tick or two, but if you got confirmation on a trade, you could consider it the cost of doing business there. Um, anything else you got on that, Coach Ball?
Yeah, it's not easy being sleazy. You're gonna trade cattle, you got you gotta pay that price.
Right.
By the way, it's very hard to trade from almost all the accounts here.
Yep. $10 a
I
tick.
love
Yeah, kick it pretty
cattle,
expensive.
but even in my own accounts, I'm like, it's the risk is too much in a
Yep.
short term. So it, but it's been a great trade.
Yes, it has been. Uh, all right. Any other markets we want to talk about, Coach Paul? We are at time here. Got one more question for you, Paul. Do you recommend any trade books, psychology, or technicals?
Oh wow, that's a loaded question. We don't have time for that right away. Number
Mhm.
one book is hmm, I have a whole library, but I would say you who asked this question? American Trader, who's losing
24% of the
73% of
time.
the time and
Write a
getting
book.
paid. You don't need to read Best Loser Wins because you're already doing it. Um, psychology books. Boy, there's some you know here. Trading in the Zone, Mark Douglas. If you have not read that, to me, that is the Bible of psychology for traders, written by and specifically futures traders. He was a futures trader. So check that book out.
That is a good one. That is a good one. Chat, you guys make me laugh. Aloha, Maui man. Uh, great session here. Great session. Coach Paul, anything you got to say before we go?
Um, First of all, congratulations to. I mean, we had a few people come in here and thank us that they were getting in their process, and that's exactly why we're here. And that leads to what I've learned is, develop your plan, your process, and plan your trade your plan. Bring it down to that. All right.
Go. A comment one more time. American Trader says, I've been through that book 3 times now, was hoping for something special. What I've realized in my trading journey is that when you go back to the same book, you hear the information differently. You read the information differently. Where you read it, you go get some life experience, some market experience, and then you come back, and what you hear may sound completely different. So I honestly I go back to the same books all the time. But trade well, everybody. Manage your risk. Coach Hoop is not doing his class in Discord today. He should be back tomorrow. But we do have Coach Ray and Coach Vince 6 p.m. and 7 p.m. Central Time. Of course, Coach Dakota with Soul Markets at 7:30. I'll be joining him tonight. We got Aaron with the London Open 1:30 a.m. Central Time. D with the Euro Trade 3:30 a.m. Central Time. Thank you everyone for joining. As always, hit that thumbs up button if you haven't done so already on the way out. We appreciate you all being here. Trade well, manage your risk, and we will see you all tomorrow. Bye.
Bye.